Hey, good morning. Let's go over today's trade plan. So we saw in the overnight session that responsive buyers were active on the pullback to the 2103 half support, and we tested that area a couple of times, and every time buyers defended that zone. So heading into the open, the 03 half to 05 half is initial support. That is the breakout area from yesterday, and holding above it tells us that the buy side is still in control. The overall expectation is for the market to balance today to essentially consolidate some of the gains from yesterday. So holding above the previous VPOC of 07 quarter can lead to a upside break and a new all-time high, but it may only be a marginal high. So we may only get up to the 19 to 21 zone and then start consolidating and balancing. So the overall idea is to look for just balance at higher prices. Now, in the event that we break below 03 half to 05 half, it doesn't mean that our bias is now going to be bearish. The buyers will still be in control, so we can still look for long setups at the support zones below. So 99 to 2101 is an inflection point, and that's a spot where buyers can still be active in the event of a deeper pullback. And then the 93 half to 95 half is a very key support zone at this point. And if this breakout is still going to stick, then ideally we want to see 93 half to 95 half holding, and that's really the worst case scenario. So that can be seen as almost a line in sand, and I'm not expecting a pullback to 93.50 to 95.50, but even if we pulled back to that zone, overall, the buyers could still step in there, and we could still go right back up to 03 half to 05 half, and even higher from there. But the expectation is that the buyers actually hold the market above 99 to 2101. That's essentially the start of yesterday's upside breakout. 03 half to 05 half is the actual top of the balance area that we broke out from. So, ideally we actually hold above those two zones and consolidate and then make a new all-time high and then start balancing within a range and establishing value at higher prices. So that's the expectation. Off the open, we'll be watching for, at the very minimum, a lack of weakness in the internals. So we don't want to see a weak advanced decline. And if that's the case, then we may still pull back and retest some of these support zones below. But if the internals are holding up and the momentum continues to be on the upside, then we can break from the overnight balance and then make a new high. And then above 14.5, we also have to keep in mind that there is no hard resistance. So 19 to 21 is an area where the short-term range could be exhausted temporarily, but it doesn't mean that the market has to stop at 19 to 21. We can just kind of rotate, balance a bit, and then go higher to 24.5, and really there's no hard resistance above. So we're not going to be relying on these upper resistance zones as areas to short the market. They're just reference points where the market may get short-term exhausted. So it's not hard resistance because above 14.5 the market will be making new all-time highs. So at that point you really have to be in tune with the type of range you can expect on the day time frame. Given the current volatility environment, the type of directional movement you can expect before the market gets a bit exhausted, which right now in the S&P, if you move directionally about 10 to 12 points, typically that marks the end of that swing, and then the market starts to balance a bit before it makes another swing high. So you can use that information too, and try to time an exit on any long setup that you might take on pullbacks. Now at the 07 to 07 quarter, which is essentially the middle of the overnight balance, at that area it really only makes sense to initiate a long if we are seeing some decent strength in the underlying internals. And again, we don't want to initiate in the middle of range. If the momentum is going against us, then it's better to wait for the edge of the balance, which right now is around 03 half to 05 half. So those are the main thoughts heading into the open. There are no econ reports pending at this point, so that means there's no real catalyst to drive the market big one way or the other. And given that the buyers are in control on multiple time frames, the focus will be more on long setups, and we're going to avoid shorts unless we get a very clear-cut setup on the day time frame. if there's a disconnect in the internals or the momentum is clearly to the downside, then we might consider the short side. But even then, it's going to be conservative and at good location. Taking aggressive shorts in this market doesn't make sense. So for the most part, the focus will remain on pullback long setups in this market. So those are our main thoughts. Let's see if the buy side can maintain control this morning and if this breakout can stick, and we'll take it from there.